How is it, Kelly, that 5 years later, Lehman Brothers is still making billions of dollars for anybody, let alone hedge funds?
Yeah, well, I think it's been a surprise for a lot of hedge funds that the trade has one, existed this long, and two, right now seems to be one of the best big U.S. distressed investments right now. And it's because of, A, there's been the sheer size of the estate for Lehman was surprising to hedge funds. There's just been so much debt. But the value of the assets in Lehman's estate has really surprised investors to the upside, because the bankruptcy lawyers and the restructuring firm has done a really good job about adding value to the assets in the estate through litigation and settlement.
This is Alvarez and Marsal?
Alvarez and Marsal, right, and the bankruptcy lawyers like Harvey Miller.
What kind of players are in this market? I mean, is this something that Erik and I would go and invest in, or is this sort of relegated to a bunch?
It's relegated to a very specific subset of hedge funds. Really, the guys that are pretty big, have multiple billions of dollars in assets, who have the resources and manpower to do the analysis on a complex bankruptcy. So it really just is a lot of hedge funds and a lot of the big hedge funds.
And is there any sense as to how much longer this trade has to play out? Are there further recoveries to be had?
There are different estimates. We've heard 1 year to 3 years, so as long as 3 years. So it's not actually much longer to play out, and distributions are dwindling. It's not as much as they have been in the past few years. The big money has been made, but there are still newly available trade claims that we've heard have been coming to market that weren't available before. So it's still a current trade.
And what changes it? What disrupts this whole thesis here?
It really shouldn't be disrupted. I think at this point, hedge funds have made their huge gains in the bet, and they're pretty pleased. They're trying to milk the rest that they can out of the bet, but it's against the backdrop of a very slow bankruptcy picture in the U.S. Defaults are very low, so there's not much more to do in the U.S. besides like energy future holdings, the old TXU, and there's that and Lehman at this point in the U.S.
In order for these hedge funds to have taken the positions that they've got, or may yet take, somebody has to sell. Who's been selling the Lehman debt?
Originally the Lehman debt holders were a lot of the banks like Morgan Stanley, but they didn't want to have risky debt, what was perceived as risky debt at the time, so they sold to hedge funds, which back then were among their competitors. I mean, since the Volcker rule, that's changed, and it's not really banks against hedge funds as much, but it's been a great trade for hedge funds, and probably, not, sadly, for a lot of the banks that sold, not for them.
So if a hedge fund wanted to take a new position or increase an existing position, it would likely be trading with another hedge fund at this point?
Probably, yeah. A lot of the holders are hedge funds now. From what we've been told, the ones that have been trading throughout the years are about 20 hedge funds that have been in the Lehman bankruptcy.
Are there any kind of units or something that's particularly lucrative, like something that's really stood out?
Yeah, Lehman Brothers Europe has been a really good subsidiary. That debt's gone up a lot. Some of the other subsidiaries, too, there have been some that have gone from initially trading at like 20-ish cents on the dollar to greater than 100 cents on the dollar.
Really?
So
better than par?
Yeah, exactly. So some have been very, very lucrative, more so than others. But really, across all entities, it's been pretty good for hedge funds.